All right. Good morning, Checkmate crew. It is 30 minutes after the opening bell of the New York Stock Exchange at 10 a.m. Eastern Time. And today is Tuesday, December 20th, 2022. Yours truly, Mickey Blindside here with your market memo. Okay, so today, let's start with the big news of the day. Overnight here in the United States, of course, if you're overseas, this probably happened daytime or in the afternoon, depending on where you are. The Bank of Japan came out with kind of a curveball today, and they are modifying their yield curve control policy. So they pinned their 10-year government bond yield around 0% to control interest rates. And so policymakers had a band of a plus or minus 0.25%, and they just widened that trading band to 0.5% plus or minus. So instead of this 10-year bond trading at a 0.25 or minus 0.25 band, now it can trade up to positive 0.5 to minus 0.5%, and they said that is in effort to enhance market functioning. Okay, now on that announcement, all right, we had the 10-year Japanese government bond yield rise 15 basis points to 0.41%. Now, that may seem like a small move, but that is actually a 9 standard deviation move based on data over the past 10 years. 9 standard deviations. Let me just put things in perspective for you guys. 2 standard deviations would be within the realm of, let's say, around 66%. And when you get into beyond 3 standard deviations, you're talking about less than 2% chance. Okay, so this is a 9 standard deviation. 9 standard deviations. So that's a huge move. Okay, based on again 10 years worth of data. The Japanese yen. All right, the Japanese yen is up. Well, here in the United States, we chart the Japanese yen, U.S. dollar to Japanese yen, long U.S. dollar, short Japanese yen chart. You can flip it, and actually, we do have that flipped version here on my other terminal here. Let me just show you. All right. So if you want to think of it as more of a long Japanese yen trade, it's up 3.5%, around 3.5% today. All right. So Japanese yen is up 3.5% today. The Nikkei, however, fell about 2% on this. They are an exporting country, so whenever their currency valuation goes up, their export competitiveness goes down. And so we're seeing we saw at least a little bit of a sell-off in Asia. And so that's the big news of the day. You're probably going to see a lot of this on the media, and you're probably going to see a lot of this on social media and things like that. It's very interesting. Okay. Now, what are the implications of this? Okay. Here's the thing. For the past, let's say 10 years or so, or more even, Japanese investors have had a very hard time getting a positive yield in their own country. Okay. And that has been one of the biggest forces in basically pushing Japanese investors to invest overseas. Okay, now for the first time in many, many years, Japanese investors have a chance at getting a positive yield domestically. Okay, now, how big is Japan as an investor class? It's actually pretty big. It's actually one of the largest. It has one of the largest savings rates in the world. It's like a cultural thing there. They don't spend a lot of their income. They save a lot of their income. Japan is just one big savings account. Okay, it's got a lot of cash. A lot of institutions people, they don't spend all of their income. They save a lot of it, okay? Again, it's a cultural thing there. And so they invest a lot of that money overseas, all right? And so now we're seeing Japanese investors getting a positive yield domestically. What do you think that they're going to do with some of those funds that are invested overseas? They might bring it back home. So we might see a little bit of volatility due to this, okay? We might see some volatility in this. Back in September, all right, and I'm going to have some links. So if you guys are watching the recording on YouTube, there's going to be an exclamation point right here on the top right-hand corner. Go ahead and click that, and I'm going to put some links on there. But back in September, I told you guys about a potential chain reaction trade that could happen. I think it was around end of September when I said that. If the Japanese yen were to surge, we could see the dollar drop, all right? And we could also see gold surge. And this is all going to be done mostly by the quant funds. And we're kind of seeing that already. We're seeing gold go up, silver just woof. Look at that, almost 4.5%. Platinum is up 2.5%. This is a chain reaction, and part of that chain reaction was also Boeing stock as well too. Let's see what Boeing is doing. So Boeing is a little bit of a muted response, but Boeing had such a huge run up. I'm not surprised that it's more of a muted response from Boeing. But the main chain reaction that I was talking about was mostly in the dollar and precious metals once the Japanese yen surges. And so we're seeing that chain reaction event right now. The yen is up, the dollar is down about 0.75 of a percentage point, and we got precious metals all rallying based on this, okay? And I think if that continues, if this continues where the Japanese yen keeps going up like this, we could see the dollar keep coming back down, all right? We have a dollar long trade, unfortunately, but, my position sizing is such that it's more of a hedge just in case if we see the dollar surge. I'm just trying to protect some of the shares that we have, like Quad U and things like that. So I do have some dollar long hedges with UUP, and we'll go over that pretty soon here. But if the dollar keeps coming down and the yen keeps going up, I think we're gonna start a new uptrend in gold and precious metals. And so this is even stronger case for precious metals. And again, you guys know, what I'm trying to get into. I'm trying to get into silver right now with the silver junior miners, and I'd love to see this pull back a little bit, okay? I'd love to see silver pull back to about $21 or so. And if that happens, hopefully we'll see the junior miners and some of the silver miners come back down a bit. I'd love to see this junior miners under $10 to get in with some leaps. For those of you who do not want to be in the junior miners and would rather be in the the regular ETF, the more larger silver miners, you can get into SIL as well too. And SIL, I would think, if silver pulls back, we could see this come back and head down to around $26 or so, and that would be a great entry, I think, on a reward to risk basis. For me, though, I'm going to stick to the junior miners, because when the miners do go up, generally the junior miners go up even more. It's a little bit more leveraged, a little bit more dangerous too. But with me, again, I'm going to be using leaps. So with leaps, you don't put as much capital to participate in the delta moves of the underlying. And so I'm going to put as much as I'm willing to lose. So if it goes to zero, it is what it is. I'll keep my position sizing small, but my rewards could be still really great if SILJ just keeps running up. Let's just take a look at some of the, let's see here. Let's go trade one. Okay, so let's see here. SILJ. Yeah, SILJ, if we can see the 759 days. So I like 3-to-1 leverage. I mean, if this comes down a little bit, you know, that'd be nice to get, you know, the $9 or $10 strike. And you got 2 years, and then I'll be selling, you know, poor man's covered calls against it. So that's the trade that we've been talking about this for months now, okay? Months, again, since September. And I'll put the links right here. Just click on that exclamation point. But this is something that we've been planning on now. And so finally, we're seeing the macro and quantitative edge setting up, but we need a pullback, okay? I don't want to chase this, okay? I really want to pull back. I want to see the Japanese yen perhaps do a retracement, the dollar do a little bit of a retracement, and boom, we can get into SILJ. As far as the retracement, you know, I would love to see the dollar at least rally just a little bit so that we can get out of our UUP position. UUP right now, we're in the January 2024 calls. We're a little bit underwater on this. You know, I think by about, let's see here, about 10-15% or so. So we'll see what happens on this. Again, it's just, for me, I have a very small position. It's like a hedge for my overall, you know, for the quad U, you know, things that metals and things, they're very, very sensitive to dollar moves. And so, I am willing to hold on to this a little bit longer and face that drawdown. And again, I got about a year, so we'll see. We'll see what happens. Again, it's a very small position for me. You know, again, it's just a hedge for my quad U shares. Speaking of quad U, we haven't taken a look at that in a while. You know, since we're talking about quad U is flirting with 6 again. That's around where my break even is around 6. So it's flirting with that line. I'm just waiting for an opportunity. Right now, the IV, the implied volatility is really low. IV percentile is extremely low right now. I think it's like in the single digits for the IV percentile, meaning that for the past year, IV, the implied volatility on quad U has been higher most of the time than it is right now. So you're not really getting a lot of bang for your buck when you're selling premium right now. So I'm just waiting for IV to pick up. Oh, look at that. It did pick up just a little bit. So we'll see. Maybe it does pick up. And if I would love to see IV percentile get to a, you know, at least like, I don't know, 50 to 60% would be nice. All right. You know, IV right now being higher than 50% of the time for the last year, that would be, you know, a starting place to start looking to sell some premium against my position. You know, if we see that this pops over 7 and the IV really pops up, I might start selling some out the money calls again and bringing down my cost basis. This is something that I'm holding for a couple of years. You guys know what I think about uranium. I think this is, you know, for as far as energy security is concerned, you know, if you're talking about energy security, most countries, you really need to also include nuclear energy, all right? Speaking of energy, let's talk about nat gas. We're seeing a little bit of a cold spell here in the United States. Market doesn't seem to care. Maybe it's already priced in. Who knows, right? This is the problem with trying to trade around the weather, okay? It's a fool's game, in my opinion, to try to trade around the weather. Now, we did have a level of 580. For some reason, my alert did not go off, and I feel very lucky that my alert didn't go off because that was the level that I was going to buy some options on Boyle. Thank God that didn't go off. Thank God I didn't do it. And overnight, we saw natural gas come down. At least the Henry Hub pricing came down by about 8% or so. It's like catching a falling knife. I'm not getting involved in this now. Okay, I'm not gonna get involved. I'm so lucky my alert didn't trigger. So I guess sometimes, you know, you get lucky like that. And so that's tough. I mean, you know what? Actually, right here, the reward to risk. It's hard to say if the reward to risk is in your favor here because natural gas is just one of those commodities. You know, they call it the widowmaker for a reason. It just has such big moves. It's very costly, and especially Boyle. that has such a high implied volatility. Look at that. Look at that high implied volatility. It has such a high implied volatility that if it goes against you and the IV drops, that's a very, very expensive mistake. And so, you know, the number one, I always tell you guys this, the number one rule in trading is capital preservation. Capital preservation, and not just financial capital preservation, but your mental capital as well. If I were to take this and, you know, if the volatility IV and the price goes against me, I don't know what that's going to do to my mental psyche. So I don't feel very compelled right now to enter this trade. The cost of being wrong is really high. And so I may just back out of this and not get involved. For those of you, I know some of you bought some weeklies on this. Good luck to you guys. Who knows? Maybe that cold snap happens Wednesday, Thursday, and this rallies hard. That's hard to say. It's really hard to say. Let's actually take a look at. Let's see here. Yeah, I mean, you know, it's quite expensive. I mean, unless you go like weeklies, but if you do weeklies, it's gonna be a zero or hero type of trade, and I don't know, that doesn't seem very appealing to me at this point. So that is natural gas. We're on energy. We might as well talk about. You might as well talk about CL as well too. Let's see here. Crude oil. Crude oil is at 76. It tried to stage a little bit of a rally. We'll see if this holds. You know, Germany just announced that starting in 2023, they will no longer be buying Russian crude oil. I'm not sure how true that's going to be. We shall see. But that is at least the rumor right now and the announcement that they made. We'll see what happens. I still think that there's a very good chance that we see lower prices in crude oil, at least in the next month or two. That's very possible. Okay, so I don't, you know, this could go down into the 60s, you know, and that would, you know, that is where I would feel very compelled to go long directly on the CL options futures, the futures options. So, you know, maybe some call spreads or something like that. But 60 to 63 zone is like where I would love to get long on this. If we get there. If we don't get there, hey, so be it. Okay, so be it. If we do rise up and royal rallies, you know, I'm willing to start shorting at around here, the highs. And again, that's, you know, just the reward to risk is just in your favor. You know when you're wrong. If it starts busting out 2 or 3 days above it, then you can just enter, you know, you can just exit your trade at a very small loss. You know, I just don't want to pay too much if I'm wrong. All right, and so I'm going to wait for those levels. I know that's a huge band to be waiting for, but I think patience will pay. We're probably going to see a big move in oil probably in the next OPEC meeting. That first week of January, we got this huge OPEC meeting coming up. We shall see what happens. They're probably going to cut production in that meeting. All right. Now, is that already baked in or not? We'll see. Crude oil tends to move with the crack spread. So whenever the crack spread diminishes, meaning the spread between the distillates that are sold versus the crude oil that's bought, if that narrows, if that margin narrows, we see you know, selling pressure in crude oil. If that margin widens, then we see buying pressure on crude oil. So right now, the response from gasoline is still very muted. Unless we see gasoline really start shooting up, then I would think, okay, maybe we've got a chance at a crude oil rally. But until we see this really break out, it's going to be hard for that to become a reality. All right. So that is energy in a nutshell. All right. Oh, speaking of which, we entered a trade recently FLNG. Okay, I entered FLNG. Some leaps, the January 2025. I always show you guys my positions. You know, I got nothing to hide from you guys. I show you everything, my gains, my losses, everything, my risk management, everything. Okay, so we did enter this. We're at a profit now. Let's see here. How much are we in a profit? Oh, look at that. We are up. We were up a good 5 to 10% on this. I am going to be selling premium against this. I'm just waiting for a little bit more of a pop here. You know, the implied volatility is a little bit down. I'd like to see implied volatility come up just a little bit. Maybe if we are in the $37, $38 zone, I'm going to start selling some covered calls, perhaps a January or February's. Some of them have decent premium, but I think if the IV goes up, the premiums are going to get even juicier. So I'm waiting on that. You know, some of these, hopefully we can sell something in the 40s or something for a good, for some good premium. And I'm just waiting on that. Okay, so I'm watching this like a hawk, and hopefully we can start generating some income on this, and that'll be a good example of how we can do poor man's covered calls and have a efficient capital allocation to a trade instead of putting down $34 or $3,300 per 100 shares. What you can do is you can get one leap for, let's say, 1,000. And that way you get kind of a 3-to-1 leverage. And that's basically what I did here. Yesterday when I entered the trade, the FLNG was around $33.50 or $33.60. But I bought it at around $1,100. And so that gives me about a 3-to-1 leverage. My delta is at 73. It's close to it's not 1. It's not a delta of 1, but it is quite high. And so I'm getting that upward delta for a lot less capital. Okay, and I'm able to sell shorter dated calls against it without having to put up more collateral. So you could see you can get involved in a lot more, get involved, in a name without having to devote that much capital. Now, having said that, if the trade goes against me, I'm on, the losses as a percent is going to be larger. Okay, so if it goes up, I don't know, let's say 2 or 3%, yes, I'm going to get like 5 or 6% gain. But if it comes down 2 or 3%, I may be on the hook for about 6, 7%. And the leap can go down as a percentage faster. But again, it's I'm putting less capital up on there. So if you size your positions correctly, it shouldn't be too much of a problem. Now, for me, I always position these trades so that even if it goes to zero, I'm going to be fine. With leaps, you have a little bit less liquidity. There's a little bit less orders in there in the limit book. So it is harder to get in and out of. And so you have to be ready for these large drawdowns because you may not be able to get out at a decent enough price. And so, psychologically, when you can't get out at a decent price, you tend to hold. And so I'm always cognizant of that. And so whenever I get into some of these leap names, I, assume, hey, it could go to zero. So, what am I willing to lose? And that's then from there, I can, size accordingly. So right now I do have some leaps here, these 25 calls for January 2025. And again, once IV goes up and once we get to around the 37, 38 zone, I'm going to be selling poor man's covered calls against this. And we'll see what happens. Okay, I do think that this is still going to go up. This is one of those liquid natural gas tankers. We saw some examples. Remember last week we took a look at STNG and some of the other tankers that had earnings recently, and we saw that they're able to command a premium over the spot container rates. And so that's kind of our thesis for the oil and gas tankers that we had from about a month or two ago. Speaking of which, let's take a look at the Baltic Dry Index. The Baltic Dry Index, this is the kind of the average of all the major routes for, for container shipping. We're starting to see it creep up. Now, I like to use the weekly chart for the Baltic Dry Index, and we are attempting to make this higher low on the Baltic Dry Index on the weekly chart. I'd like to see this make a higher high. That would definitely support our thesis a little bit more, but we shall see. Okay, on the daily chart though, and these Baltic Dry Index is quoted at the end of the day, so it's not like a tradable product. This is they take the quotes from all the major shippers at the end of the day, and they post that price at the end of the day. So it's not like it's trading in the middle of the day. No, it just updates at the end of the day just once. Okay, and so that has not been updated for today, but it does seem as if we're in the starts of a potential daily uptrend as well too. If we can, this is that higher low. If we can make a higher high, hey, that would be supportive of our thesis again. So FLNG, that's the name to be in. I do have some, I saved up some ammo. I position sized it so that I can get into some other tankers as well too. Scorpio tankers, the STNG. I would entertain getting in this one as well too. This is a very good tanker. They are able to command a very, very good premium, and we saw that from their earnings report last week. And if it were to come down under 50, that would be a great buying opportunity for STNG. So I'm also holding some ammo for that as well too. But right now I've already pulled the trigger on FLNG because it did hit our 3360, 3350 zone alert, and boom, when that alerted, I bought. Okay, so patience and discipline, patience to wait for our levels, discipline to act on our plan if we see our levels reach. Okay, so that patience and discipline, your two best friends in this market. Okay. Speaking of which, what's going on with corn? It's not there yet. We talked about the corn trade. If it comes down before planting season, I'm willing to go long. We're not there yet, but we shall see. All right. Let's talk about crypto for a second. I know I've been getting a lot of DMs about crypto. When's crypto? When's the time to get into crypto? Crypto, right? Okay, so we saw the open interest go up from like what, 4.5 billion to 5.5 billion about a week or two ago. Now we're back down to about 4.9 billion. So it looks like open interest is coming back down. So the options market is not really going to tell us much. I want to see at least like $6.5 to $7 billion in the options and Ethereum options to see if that can push or pull price in a certain way due to all the delta hedging and whatnot. But until that happens, no, we're just going to have to base it off of the charts and off of other data. But right now, Ethereum is kind of just chopping around this zone that we've been using for trade entries. The green line here is the trend, the upward trend from the 2020 COVID crash and then the 2021 uptrend. And so we're seeing this. Interesting enough, somebody pointed this out to me. I wasn't even looking at this, but somebody pointed out that we had a perfect back test of this, and we did. We had a perfect to the tick back test of this line right here, this value line. And we'll see if it can get over. If it can get over, I mean, let's take a look at the weekly chart here. If it can get over, all right, so it touched it last week. Within 2 or 3 weeks, if it can get over that, it could be a sign of a false breakdown. And usually false moves comes fast moves. So we could see this really jump up if it gets to there, and then we see buying pressure come back. If we also see the open interest come up on the Ethereum options chain when this happens, I mean that would kind of be a good lie detector, and maybe we see a sustained rally I do think that sometime next year, maybe around February, January, February or so, we could see the Nasdaq and tech stocks rally. And if that happens, this, we could see Ethereum and Bitcoin go up as well too if that happens. So I think that's still about a few weeks away at least. Maybe January, February or so. I do think that we're going to see a rally, and I have my reasonings. I think that with TNX having a muted response, and I think this is just a retracement. If we just retrace and we curve back down, I mean, the institutions are going to start buying tech stocks again, and we're going to see this the asset rotation go from value to tech again, and we might see even this growth to value chart reverse and finally head up again. It is kind of basing right here, so if it bases and it starts coming up again around January, I think that would be another positive sign that this is the setup is there for tech stocks to rally around during Q1 of 2023. Okay, so far the setup is there. It doesn't mean it's going to happen for sure. I'm just saying the setup is there. Okay, it needs follow through now, but again, that's going to take a few weeks in my opinion. All right, speaking of which, we haven't looked at our liquidity data in a while. Some of you also mentioned too that the VIX and the S&P 500 were falling at the same time. The VIX generally goes opposite S&P 500, and I've talked about why that is, with dynamic options hedging with market makers, but it doesn't have to do that all the time. Okay, there are moments where they go up together, there's moments where they go down together. Okay, and so we did notice that the VIX went down. Now you got to understand, last week we had that huge amount of data dumps. We had FOMC, we had CPI, we had the jobless numbers. So there was a lot of over hedging happening. A lot of those puts actually got rolled. Okay, they got rolled into January, March, and even December of 2023. And so they got rolled into lower delta. Okay, and so we noticed that with that, sometimes what you can see is that the VIX fall, the premiums fall and the premiums on the S&P 500 fall as people are dumping some of the higher, closer dated IV and buying some of the lower IV options that are a little bit further out. So that's, that phenomena can cause, especially, and especially we're just getting off of options expiration from last week, right? So for the next couple of days, we might see that. We might see the market and the VIX fall at the same time. And we saw that yesterday. Today, where's the VIX at? The VIX is down and the market is up. So now, we're back to that kind of that inverse correlation. So again, just because it happens one day, guys, it's not, don't sensationalize it. Don't make a production out of it. Sometimes it happens. And again, we just got off of OPEC, options expiration, very hedged options expiration. Now those puts are being rolled into January, March, and December as of last night when I checked. And so again, that phenomena can cause some weird price action in VIX and the S&P 500. But that probably is over. As we get more and more away from that December OPEX, we're going to it's going to start settling down until of course a couple of weeks before the January OPEX, which we're still about 3 weeks away from that. So we'll see what happens as we get closer to January OPEX, but I thought I'd share that with you guys. We haven't looked at our liquidity data in a while. Let's just take a look. New York high-low line, it is curving down. And again, this keeps coming down. If this keeps coming down, it's hard to sustain a rally. Okay, it's really I've been studying this. I studied like 3 to 4 decades worth of this data, and it's really hard to exit a bear market when this is heading down. High low is the New York Stock Exchange. They take a look at all the stocks. What are making 52-week highs? What's making 52-week lows? Subtract those two numbers. Okay, if it's negative, it means there's more stocks making 52-week lows, then making 52-week highs. If we're seeing this curve up, it means we're seeing more and more stocks getting 52-week highs than 52-week lows. And so that it is a very good indicator of money. Is it coming into the market or is it leaving the market? Okay, so the stock market, that is. Okay, and so this is one of the things we use to measure potential liquidity in the market. Okay, is money coming in or is money leaving? All right, the New York advanced decline line also is dropping, which means the breadth is decreasing. Less and less of these stocks are participating in rallies. However, I don't think that is what's going on today, is it? We'll see. I don't have that pulled up, but we'll see. This thing updates once at the end of the day because it measures all the advancing and declines, and we don't know what stocks are going to end up advanced or declined until the end of the day, right? And so this is still pointing down, and if this is going down, it means less and less of the market is participating in rallies. So we do want this to curve up. If you're a bull, you want this to curve up. All right. S&P 500 equal weighted index is also coming down. Kind of looks like the S&P 500 chart. Most of the stocks are participating in the decline. Okay, they're participating in the decline, but not all the stocks are participating in the rallies, at least from the last week or two. Okay. Our junk bonds advanced decline line also is starting to curve down a bit. We will see what happens, but it is starting to curve down. All right, not much though. It's actually the junk bonds advanced decline line is surprisingly stable right now. Okay, so this also kind of makes me feel that I don't think we're going to visit those lows, the 3,600 or, and the S&P 500. I just don't see that happening until this starts curving down. I mean, this has to really start coming down. We would want to see this, come down at least and start visiting the lows again. But that is not what we're seeing. That's not what we're seeing. It's surprisingly stable. Okay, even though the market dropped about 5 to 7% since the jobless claim numbers, the junk bonds ADL line it did dip a little bit, but it's surprisingly stable. I would have expected a lot more. Okay, but it seems as if again our high-low line. Really, we had a divergence from the first week of December. The high-low line was curling down, but our junk bonds ADL line was curling up. All right, and that's why I warranted caution. I said, hey guys, be cautious. If you guys are long, you might want to start managing some risk. And thank goodness, I was able to warn some people off. And also, we got involved with some puts. Remember, because of this. Speaking of which. The puts that I was in XLP. I got out of those, by the way. I got out of them for some profit, just so you guys see. No more positions anymore. I alerted the Discord. So one of the advantages of joining our Discord, which is completely free, is that you get these alerts whenever I make a trade. You don't have to follow the trade that I do. I just tell you what I do. It's up to you whether or not you want to do that or not. But we were able to collect a good 20% on this. I could have collected 40, but shoulda, woulda, coulda. That's life. All right, that's trading. So you don't get the complete top. You never get the complete bottom. You always fight for the middle. But it was a good 20% trade. I think it was a couple days hold. And this kind of alerted us to that, the high-low line coming down. Also, this was part of our tax selling thesis as well as oil coming down thesis. And so it didn't make as much as I thought it would, but it is what it is. Hey, I'll take 20% any day, okay? That's all I had planned for today. Anything else you guys want to look at? Any questions, comments, rude remarks? Oh, somebody typed something. Hold on. What is this? Uranium Energy win awards from the U.S. Department of Energy supply. What is this? Uranium Energy wins award for U.S. Department of Energy supply, 300,000 pounds. Ah, so they're starting to reward this. So the strategic reserve, strategic uranium reserve. Who else won this? Strategic awarded. Oh, hey, UUUU. Our Quad U got it too. Hold on. Issued a solicitation. 300,000 strat has been contracted to supply this held in the company's. Okay, I will do some more research. I'll report this to you guys tomorrow. Thank you. Who sent this? MSC. Thank you for this. I didn't know they started already awarding this. Okay, let's hold on. Oh, they did win. Hold on. Here we go, guys. Quad received a contract to sell $18.5 million of natural uranium, but that was 4 days ago. 4 days ago. 1, 2, 3, or 16. I mean, okay, so yeah, okay, so maybe that's why we're seeing this, or maybe that's why we're seeing this interest here. The IV go up. Could be. Okay, so 18.5 million is what? Like 400,000 pounds. So they got 400,000 pounds. I think the government mentioned that they're gonna do about 1 million to 1.5 million pounds of uranium buying. So UEC got what, 300,000? It looks like Quad U probably got around 300,000. Again, I'll do some more research tonight and I'll report this to you guys tomorrow. But it looks like they got, 18.5 million with spot price being around 40 to 50. We're talking about, probably around 300,000 pounds. And I know Quad U has about 1 million pounds in reserve right now in their own reserves. So they're probably not going to need to mine more for that. Of course, they might want to replenish their stockpile. Let's see, URA. And then what about CCJ? It doesn't look like CCJ is enjoying any of that upside as much as Quad U. All right, well, there we go. Catalyst, baby. All right, so hopefully we see something. All right, and again, I'm ready to sell some covered calls once it gets to, let's say 7.5. 7.5, and we see IV percentile go over 50%. I'm definitely selling covered calls, bringing down my cost basis. Nice. So they did get awarded. That's nice. And, it's not that this one sale is not that big. 300,000 pounds of uranium really isn't all that much. But it, I think it's more of a signal to the market that these are the serious players in the uranium space. It's the ones that the U.S. Department of Energy contracts for its uranium supply, okay? You want to be on that list. If you're a uranium producer in the Western world, all right, you want to be on that list, all right? And our stock is on that list. Hooray, hooray. Okay, so that's great. That's great news. Now, in it by itself, it's not going to change revenues all that much, but it puts you on the map, all right? And so hopefully we see a lot more contracts in 2023. Hopefully Quad U is the producer of choice. It is one of the larger producers here in the United States. It goes, I think CCJ may be the largest in North America, but I think Quad U is the second largest. All right. But Quad U is more than just uranium. They also do a lot of rare earth metals as well, too. They also do vanadium. And so they're exposed to some of the other minerals as well, too. And right now, vanadium and some of these rare earths, right now, they came down from the highs. But once, because there's not many producers of those rare earths and vanadium minerals, whenever the prices do go up, it can soar, and that's a spot price generally too. The quality of your rare earth, the more pure it is, the more premium you can charge for that. So even though the spot price may be low, if you've got a very good source of vanadium and rare earths, you can actually charge a premium over spot. And that's where Quad U is at, right? Their vanadium is actually really high quality and pure. And so they're able to charge a very good premium over that. Just a little extra, I guess, a deal sweetener for getting involved in Quad U. But I still, this is one of my high conviction plays. Unfortunately, it did not come down to 4.5. My final buy zone where I was going to double up some more shares was around 4.5. And I thought on this sell-off, we're going to get there. But with this announcement, I don't know if we're going to get there or not. It's already trying to create an outside day up on the daily chart, okay, which is pretty bullish. An outside day up right here. That's a pretty, if it can close here, that's pretty bullish sign on a daily chart for Quad U. Thank you for sharing that. Thank you. Anything else you guys want to look at? Anything else? Any questions, comments, rude remarks? This is your time. Anybody in chat? Nope. Well then, in that case, that wraps up our session of the Morning Market Memo. Our Discord invitation link is in the description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls, of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, I'm going to be back tomorrow, 30 minutes after the opening bell of the New York Stock Exchange, 10 a.m. Eastern Time. We'll do it tomorrow. We'll do it Thursday. We're gone for Christmas. We'll be back next week. Same schedule. Hope to see you guys then. Trade safe, okay?